Welcome back to the channel, guys. I'm your host Buckning, and today we're giving you the end of the week update and talk about diversification today. And so we're just going to get right into it because we did make a purchase for this week, and the new stock that we picked for this week was BMO, but not just this week, but for the month of October. So welcome to the channel. If you're new, welcome. If you're not, welcome back. And this is where we put in $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And so we'll just get right into it. And then near the end, we'll talk about diversification in the portfolio and what that means to me. Just remember, I'm not a financial advisor. I'm definitely not your financial advisor. So do seek a professional if you want to talk about this and get advice. And so we will go ahead and update you guys on the day, the week, the month, and then we'll update the track your dividends, where I track my dividends and show you the growth in the portfolio. So as you can see here in the activity side, we have purchased BMO stock. We were able to purchase one stock with at the price of $76.44, which was a great price. I bought it this morning. And then we'll just go to the day here. And so for the day, we're up $5.86 of 1.14%. In the week, we are up $14.72 at 2.9%. And 1 month, we are up $11.54 at 2.26%. And that is the same for the all. So BMO today was ended at closing price of $77.40. Bank of Nova Scotia ended at $56.09. So BMO, so I bought it somewhere $76.44, somewhere around here, and it just kind of went on a little uptrend there for the day. It just held strong till the end of the day, and it was great because now we're up 1.26% of the day, holding it for the day, which is great, awesome. So it just worked out very, very well. So now we have BMO in there, 1 share of BMO, and I believe we have seven shares of Bank of Nova Scotia. And for the whole portfolio, we are up $11.54, which is a win, which can buy you a lot of chicken nuggets at Burger King. One of my commenters said that, so I thought it was really, really funny. But anyways, so now we can head over to track your dividends, and we will update the tracker and show you what we currently sit at for everything. So currently not last week, but earlier this week, the portfolio value with the stocks in it is $393 Canadian. We are up $11, a yield of 6.42% and yield on cost of 6.6%, and annual income of $25. So we have 7 shares of Bank of Nova Scotia. Current price, closing price today is $56.09. Our average cost was $54.58. We have a profit of $10.58. Dividend yield currently today, it sits at 6.42, and my yield on cost, or this portfolio's yield on cost, is 6.6%. Annual income of $25.20. So we're gonna go ahead and add the new holding, which is BMO. So BMO.TO, and there it is. So we'll go ahead and we bought 1 share at the cost basis of $76.44. We'll add that, and boom, everything's added. So now we can go into here and give you the update. So currently the value of the portfolio with just the stocks is $470. We are up $12. Dividend yield of 6.26%. Yield on cost is 6.42. Our annual income is $29. And everything's updated here. So profit wise, 96 cents up. We bought it at $76.44. The end of day closing price for the BMO stock is $77.40. Dividend yield of 5.48. Our yield on cost is 5.55%. So just to give you guys a quick reminder on dividend yield versus yield on cost. Dividend yield is what it sits at currently, what your cost of entry to get the dividend itself, and the yield on cost is what you purchase it for. So we purchased the stock at $76.44 to get the dividend, whereas if someone bought it near the end of the day, they would have paid $77 to get the same dividend that I'm getting. So my percentage is a bit higher. The annual income on the BMO stock is $4.24, which brings it to almost $30 for the year, which is great. And I believe at the end of this month, Bank of Nova Scotia will give us our dividends for the month, and you'll see a video for that for sure. I'm very excited to share that with you guys. So we'll go ahead and head back to here, and we're going to talk a little bit about diversification because we have updated everyone on the week. So diversification can mean a lot of different things, and there's a lot of different ways to do it, in my opinion. When people say diversification, I think for the most part, a lot of people they talk about, having your eggs in different sectors. So whether it's the energy sector, whether it's the financial sector, the tech sector, and diversifying your money that way, or retail sector, whatever it may be. However, for me, when I talk about diversification, well, actually for people that want to invest with diversification, who are not, don't have a very high risk tolerance, we'll typically go with a ETF, electronic traded funds, I believe they're called. And that just gives you a variety of sectors or companies to invest in, and it diversifies it so that you're not investing in one single company, which is a great thing. Diversification is a great thing for those that don't have the risk appetite. But for me, diversification is, let's say, so I'll go through what I mean by diversification. Is I pick my stocks individually. I don't have any ETFs, to be honest with you. I do have mutual funds, but that's just for retirement sort of thing. Here, I like to pick my stocks when it comes to individual stocks. And the reason I do that is because the return is a bit better, in my opinion. ETFs typically have a lower dividend for the most part, and they come with an annual fee. It's a very, very small fee, but there is a fee to it as well. And what I love about Wealthsimple is that they don't charge you a trading fee or a commission. Where ETFs, even though you buy ETFs here and there's no trading commission on Wealthsimple Trade, there still is a management fee for that. It's a bit more passive because it's always those companies, so it doesn't move around a lot, not a lot of management going on, and so on and so forth. But what my definition of diversification is let's say I'm in the financial sector, which a lot of our stocks are in currently, as you can see on here. BMO and Bank of Nova Scotia both are in the financial sector, and I'm still diversified. I'm just diversified in different companies. However, I really believe that the Canadian financial sector is very, very strong. And so for the most part, you'll see this portfolio have more financial companies in it than anything else. And so I diversify in the sense of different companies, not necessarily different sectors. And that's just my strategy. You have your own strategy, and talk it over with a professional. I'm just giving you my opinion. And so when it comes to that, the thing is, let's say one company is doing good and one company is doing bad. There's still diversification in that, because in ETFs, if it's in different sectors, let's say, if you have so many ETFs in different sectors, if a company is doing bad, it pulls down the average of a company that's doing very, very well. And so when it comes to picking individual stocks, if a company does well, it's the same thing, but it's not so spread out that the big change affects me so much, if that makes sense. And so diversification is a good thing, but I would just stick with picking, individual stocks, 10 to 15 of them, where it's manageable. Don't go too high where you just can't manage it very well, and figure out, what do I need to buy, what do I need to sell. But for me, this is a portfolio that we are going to be holding for a long time. As you can see, we're already up $11.54. We're up 2.26%, where for the week, it was a great week. I think it was on Tuesday or Wednesday where the market was led by the financial sector and the energy sector that brought up the averages for everything. And so that's really good to hear. So that is currently my take on diversification. If you want to diversify, all the power to you. I'm more of a guy that wants to pick the stocks myself and make sure I diversify in companies, but not just in sectors, because I will have different sectors in here, guaranteed. And I'm just going to go with what I understand, what I believe in, what I use. I mean, everyone in the world uses banks for the most part, unless you live off grid. That's totally your preference. But banks, for me, especially Canadian banks, are just so strong, and it just gives me that confidence in giving them, my money and them returning it and having capital appreciation over time, which is a great thing. And so hopefully that adds value to you guys. If it did, leave a like, maybe consider subscribing and leaving a comment. And if you don't find any value, or you don't agree with me, please feel free to leave a dislike. It's not like I'm shooting for likes only. Like, that is just part of life. So if it's not something that you agree with, hit dislike and let me know why. And I'm totally open to hearing that, and we can have a back and forth and talk about it. And so that's pretty much it for the video, guys. Hope you guys have a great weekend. Thanksgiving is coming up here in Canada, and so we will probably see you on Tuesday, or we'll see you on Wednesday. I just record on Tuesday, post on Wednesday, and stay tuned for the more updates to come as we put in $100 a week. And we'll see you in the next one. Bye.